financial services should be the place that we focus. But the lens was different, right? We wanted to look at events because an event was slamming into the market and it was changing everybody's lives. And as we look closer, we saw really events change everything in financial services. They changed the company's trajectory. They changed the company's financial situation. They changed the company's staff and leadership as the CEOs come and go, as we've seen with Chipotle and Starbucks recently. And we realized it's really all about events, but there's no single source of intel or analytics for events. And there's technical analysis, there's fundamental analysis. So we thought we could invent a new way to look at the market so that when an event occurred, it'd be more like a weather forecast.
We're going through something absolutely historic.
Technologies across the board are growing exponentially.
It's a disruption that's going to completely redefine the way businesses compete.
In the next decade, we're going to lose 40% of today's Fortune 500 companies.
The exponential growth of computing is continuing.
AI is nowhere near its full potential.
Whether you like it or not, that the future cannot be stopped by anyone.
Hi there, everybody. Welcome back to the Future Tech and Foresight podcast. This is going to be episode number 174. I'm your host, as always, Mark Verbankov, and today we are going to be diving back into the world of artificial intelligence on a topic that we haven't touched on before, which is, I think, something that's on the back of everybody's mind, or in the back of everybody's minds whenever they're thinking about this new AI takeover or transformation or whatever you want it to call it. And that's how AI is going to be impacting investing. As I said, this is not something we've touched on the podcast before, so I'm really happy to have had my guest come on, who is not just an expert on the subject, but also creating an actual platform that enables investors to utilize AI. I'll talk a little bit about what the platform does, but then obviously let the conversation and the interview explain that a little bit further in the actual interview section of the episode. So it's pretty interesting because it combines, obviously AI and investment, but more so than that, as I think several of you might be thinking about when you hear about investing in AI, it's going to enable the democratization of investing, right? So not just the large hedge funds will be able to invest, wisely. I'm not going to go down the rabbit hole whether they do or not, but there's this idea of sophisticated investing that's only done with larger hedge funds or money managers, etc. And the idea that I think most of us have in the back of our minds, well, why is it not that AI is used to enable the individual investor to make the kinds of decisions that these larger hedge funds and money managers are doing? And I think that's exactly what we're talking about today. So we talk about, the potential to democratize investing through the use of AI and the platforms that my guest talks about today, LevelFields, but I'll get into that in a minute. We also touch on the differences between traditional AI and generative AI, which I think is something that needs to be discussed as many times as we possibly can on the podcast. And then, of course, when this comes about, when it becomes a little bit more ubiquitous, what is the expected disruption on the kind of financial services industry when the rise of AI and also these robo-advisor services become a little bit more ubiquitous? So pretty interesting conversation topics, and I'm more than happy to have my guest on today, who is Andrew Einhorn. He is the Chief Executive Officer and co-founder of LevelFields, which is this AI-driven fintech application that automates arduous investment research so investors can find opportunities faster and easier. His mission is to create AI tools that make advanced financial strategies effortless and accessible for all. With over 10 years of experience in building and leading technology and tech-enabled service firms, Andrew has a proven track record of delivering innovative solutions that solve real-world problems and generate value for customers and stakeholders. So obviously it's going to be an interesting discussion today. For any of you that listen to the podcast and do invest, I think that it will be pretty eye-opening as to what is possible now. And of course, as we always do, what will be the ramifications, what will be what will be available in the coming years. And I think with that, we can get into the discussion itself. Andrew, thank you very much for coming onto the podcast today to talk about, I think, a pretty unique intersection, right? Investment and artificial intelligence. I think this is on the tip of many people's minds, but maybe not discussed nearly as much as it needs to be. So I'm really happy to have you on and obviously discuss what you guys are up to, but kind of touch on this subject at a broader level too. I think it should be a pretty interesting discussion.
No, thanks for having me. I'm excited to be here.
Yeah. So maybe we can start off with a bit of a, mild icebreaker. What brought you into this intersection? Was it AI first? Was it investment first? Was it you were always interested in both of these things? It was just kind of a natural connection between the two. How did you get into this kind of work?
It was an atypical trajectory for sure. My career has kind of spanned a lot of different areas. I actually started my career as an epidemiologist. So in public health.
Okay.
So very big into data, very big into trying to solve problems with data, answer questions with data. And so that kind of been the thread to pull on through my career.
Mm-hmm.
Once I left epidemiology, I started doing consulting with a large government contractor called ICF International. It's a public traded company. Did a lot of different projects, from analyzing orbital debris for the FAA, Office of Space Transportation, to working for NASA, doing some projects with environmental metrics, to working with, nuclear facilities, the Nuclear Regulatory Agency, and ended up building software system for the Defense Department that did like environmental safety risk management. And as I built the software out, not as a technical person, but just as a leader over a group of vendors, just fell in love with the process of building and realizing like, oh, wow, we can combine like making things with data. That's really cool. And that became kind of my core, what I do in my life after that. So I left that job as a senior consultant and then started a company in 2009. I tend to start companies for some reason in the midst of huge crises. 2009 was the last one. 2020 was this one. So I have impeccable timing for when to launch. And that company, we were doing software that analyzed kind of the reputations and events happening to publicly traded companies. So we had clients like Exxon and CSX and Discover Card and things like that. And so whenever that would happen, we would see an event, right? So CSX might lose a train and it would flip off the rails, and it would be an environmental disaster, or sometimes just, a collision. Next day, the share price might be down significantly and they'd lose $2 billion in market cap. And similar would happen to other companies. So Discover Card would have data breach, their share price would tank. Exxon would get sued for some environmental cleanup, or they would win an environmental lawsuit. And you see these ups and downs, kind of swings in the share price related to events. We didn't really pay much attention, but we kind of like noticed the patterns over 10 years of running this company. And I guess we were at about year 7. I met somebody who was working as a portfolio manager for a major hedge fund. And he said, you guys do outstanding work, but you're getting, you're kind of getting paid peanuts for it. Like if you went into financial services, you could pretty much put 2 zeros at the end of all your contracts. And we started thinking about it a little differently. Like, well, maybe we should add, another vertical, because we mostly serve the PR professionals at these companies, and our contract sizes weren't huge. And it just kind of got our wheels spinning. And then, the long story short, the internal discussion was, in order to do this, we would really have to capitalize heavily to move into a different industry that had different types of regulations and compliance and oversight, and all that had to be built into the product, which wasn't there. And so it was going to be very expensive. We would need, millions of dollars to do it. And so we went to our board and presented basically two different paths. One was raise a bunch of money, go buy, and had a deal in hand to basically raise a bunch of money from private equity group, buy a kind of young AI startup that they were interested in at the time. They thought the combination would be really good, or sell the company. and not have the dilution of issuing new shares. Ultimately, the board said they didn't really want to wait to see this play out, over the next 10 years. So they went with option B, which was to sell the company in 2019, which we did, to another large, private equity firm. And at that point, we kind of regrouped. None of the leadership or the technical team went with the acquiring company. We all split off and reformed the company that ended up becoming LevelFields. And as we're kind of looking around and thinking, okay, what's next, right? Like, what's our act two here? What are we going to do? We kind of knew what went right and what went wrong over like a 10-year period. A lot of that had to do with Boolean search just being like really difficult to work with. So we decided, let's just fix some of those problems, and then we can decide, where we want to apply the technology next. So we started building the AI out on top of a layer of, data analysis and data mining that we had built similar before. And as we were doing that, we're kind of looking for the problem that we wanted to solve. Like, we know we were going to use data. We know we were going to use unstructured data. We were really good at that, having done it for 10 years. And we looked at, a variety of different problems that existed. So, well, what problems should we solve? And COVID hit. And it pretty much crystallized some thoughts that we had that, financial services should be the place that we focus. But the lens was different, right? We wanted to look at events, because an event was slamming into the market and it was changing everybody's lives. And as we look closer, we saw really events change everything in financial services. They changed the company's trajectory. They changed the company's financial situation. They changed the company's staff and leadership, as the CEOs come and go, as we've seen with Chipotle and Starbucks recently. And we realized, like, it's really all about events, but there's no like single source of intel or analytics for events. And there's technical analysis, there's fundamental analysis. We thought we could invent a new way to look at the market, so that when an event occurred, it'd be more like a weather forecast. Like, here's what normally happens in January in, Denver, Colorado. It's plus or minus 42 degrees and sunny, 90% of the time. If you can do that kind of forecasting with events, makes it easier to make decisions, and it eliminates a lot of the bias and the bull that's kind of in the market now, where you have a lot of third parties giving their opinion and kind of driving the action for your interpretation of what's happening, or in some cases, pure manipulation. So we thought, okay, this is a consumer product. Like, we want to help the individual investor for the most part, although we weren't going to just say, limit only to them. But we thought that is kind of the end user that would benefit the most, right? The person who could not monitor at the scale that our AI can monitor at. And, our system is sort of like a speed reader. It reads 30,000 documents a minute and looks for events that it's trained to look for that are correlated to share price movement, brings them back, and then you can set alerts and look at kind of the analytics of how that typically plays out. Does it go up? Does it go down? For how long? And by how much? And the more we kind of leaned into that, we realized, yeah, we were onto something big. People have a hard time making decisions. They have a hard time making objective decisions in the market. So it was very emotional. Something happens and you're like, oh my God, oh crap, I got to get into this stock and sell. And those who have been in the industry for a while, they see those opportunities. They've been trained for 20 years. They've seen it, and they have the institutional knowledge, but the average person doesn't. So we want to get that scale. So all of that to say, it's been a long ride to get here. There's been a lot of ups and downs, but ultimately it's that combination of sort of event management, event monitoring, data analytics, and trying to make, just like epidemiology was, a data-driven decision or prediction about, what the future outcome looks like.
Super interesting. Could we look at the events, or dive into the events idea a little bit more? So, like, you gave a couple examples at the beginning, and these seem to be things that you can't plan for. Like, I mean, COVID being the one main one you can't plan for. I mean, maybe you can think about it, once every 100 years or something like that. Something like this is going to happen. But, a data breach, or, some train derailing or something like that. These aren't things that you can plan for or forecast ahead of time. So you were giving this example of weather monitoring, weather forecasting, but to me it sounds like these events can't really be known ahead of time. Could you maybe clear that up for me?
Sure. Yeah, it's more like look back a few days ago, right? We're looking at a hurricane coming into Florida. We know that there's a hurricane coming.
Mm,
Then the question is, how much is it going to rain? How much is going to flood? How much damage is there going to be? How long is it going to take to do the cleanup? That's the part we're answering on the platform, right? So we might not know that cyber breach is going to happen.
mm,
What we do know is there were 50 others, and here's how the stocks were impacted by those. And on average, the share price moved X percent over the course of Y number of days.
mm,
Um, Tesla might be, a really good example to use. We're looking at the data right now. We have a Tesla product launch scenario on our application. And most people would say, when they launch a product, like, of course, there's a lot of excitement, enthusiasm, and then the product launches and they do really well because, Elon Musk can sell. It's not what the data shows.
mm,
Data shows that it's about 55% bearish post-announcement.
mm,
It's pretty close to 50-50. And the swings are quite large, 5 to 7% range. And looking at it today, it's down like 7%. So it's pretty much in line with our averages. And so you sort of look and they say, they're getting too technical, like, yeah, it's within the norm, not even a standard deviation outside the norm. This is what we expected. We get some pushback from some of the users on the platform. They're like, why are you giving us events that are 50-50? And
mm,
the reason is to show people, like, don't throw your money at this. It's like flipping a coin. The run up actually happens typically before the announcement, and then there's a sell off. So, there's a lot of different ways you can use that data. If you know and can see that, you can go back to other like Tesla events and say, well, how did this play out? Like, okay, this one sold off. This one sold off. Wow, there's a lot of risk here. If you're a Tesla holder of the stock, what do? You might sell right before the announcement because you don't know, how it's going to go. And you could look at it and say, well, I'm up, 35% this month. Let me get out. And if it goes well, I'll buy it back. If it goes poorly, I'll still buy it back, but at a cheaper price. And if you're looking to play it on the other side of it, you might say, yeah, I'm going to stay away from this one because it's like the election outcome. We don't know what's going to happen. It's flip a coin. We'll see. So that we have a lot of different event types. There's like 25 of them. And even with them, like, for example, an event type, which is a leadership change up, CEO departure, that can go one of two ways. If it's a really good company that's performing well, has good revenue, like an Amazon, and Bezos leaves, it does take a dip. And that dip is like a predictable amount, usually a couple percent on the first day, 10% over the next 2 months. Then it recovers, at month 3. But if it's a poor performing company and they get a new CEO, the share price actually rises. So having the system in place to monitor all this allows you, like, you're one click away from kind of back testing what the forecast should be. So you go to, a company like Starbucks, which had been struggling financially. There's a lot of consumers that are just pulling away from the long lines and the expensive prices. They get the CEO coming over from Chipotle, stocks up 9.5%, 10% just on that news. So, knowing that gives you a pretty unique advantage. And just knowing that all these events are happening all around you, we have thousands coming through at any given time, gives you lots of different intel on what's happening in the market without having to actually read anything. Because it just shows, like, here's a CEO departure happening in this company, or this company is giving back cash, and a lot of it. And you see some of those events where companies that are in odd industries like fertilizers or coal mining, or silver, all of a sudden they're giving away like $8 for a special dividend.
mm,
And it might be an 8% gain just to buy the stock and take that money from them that they're giving away. But if you peel back the onion just for a second and say, well, why is this happening? Like, why do they have so much money? There's usually some kind of macroeconomic event going on that's driving it. Maybe it's a COVID, maybe it's inflation. It could be a war, that stops the supply. So, demand goes up, price go up, like we saw with fertilizers and Ukraine, as well as coal. When the Russians cut off the gas pipeline to Europe, price of coal went up. Coal companies did really well. So you see that kind of coming out in the micro data from the companies of what's happening big picture, and you can piece it together pretty quickly. It just takes a little bit of search to know why it's happening. Or some cases, some market knowledge to say, silver companies are doing well because silver is a hedge against inflation and monetary policy. But if you don't know that, you just say, wow, this is pretty interesting. This company is doing really well. Maybe I'll put some money into them, because if they're giving away cash, they must have a lot of it. That's a good thing. So there's a lot you can do, and we have the AI for us, like monitoring things so that we don't have to, because that's been the big burden in financial services, and a huge barrier to entry for people who are just like, I don't want to spend all my time looking at stocks, looking at news, trying to figure out what matters and what doesn't matter. That's what we built it for, to do that for people.
Mm. Well, that's kind of a perfect segue to my question here. As you're talking, I'm thinking, well, doesn't this kind of democratize investing for a lot of people? Like, like I like looking at tech stocks, for instance, because I'm invested in technology with the podcast and with everything else that I'm doing. So I'm a little bit more into that world than I am, say, into fertilizers or coal or
Mhm.
energy to a certain extent. But to me, it sounds like if I'm starting to look at other stocks, and I don't just want to touch on your product. I mean, obviously we have to, because you're here, but just AI at a general level. I think this is what a lot of people are thinking about. It's like, okay, it scans what's going on in the world, and it
Mm.
gives me a vision or a perspective of what is going on. So even though I don't really understand anything about coal, I can just kind of ask the AI, tell me everything about coal and where should I invest. I think that's what the which would say the amateur or the new investor is thinking, right? Ask AI, it'll tell me what to invest. I invest and I make money.
Yeah, and you can do that with kind of, information that's out there, other articles that have been written in the past. We put out articles too. But, for us, it's more like, what is going on? Like, what's happening in the market? The market's huge. It's
Yeah.
6,000 companies, and yet if you turn on the news, you only hear about 12, 20 of them, maybe, unless there's a major crisis, but 30 at most. And that alone is very unfair, right? There's a strong media bias out there because they want to sell ads, they want to get clicks. And to do that, you talk about the most famous people and the most famous companies. So you hear only about Apple, Microsoft, and Tesla, and Oracle, and Amazon. Very little about companies that might be crushing it or have cool products or have, just talking about AI in general, right? So we hear the AI providers who are making the data centers and making the AI, but there's a whole ecosystem of other components to it. And you see some of that come through, like, companies that make the cooling systems for the server racks that are going crazy right now because they're building out these massive data centers, right?
Mm.
But it's a lot of energy. And if you're running a fan all the time to cool it down, and you're running the air conditioning all the time to cool those servers down, that's a lot of energy that you're spending. So how do you take that energy cost down? You cool off with liquid cooling pads, right? You build them underground, you build better HVAC systems. So then you have HVAC companies crushing it. They're doing engineering,
Mm.
cooling systems that are crushing it. Those selling, the actual servers like the Dells of the world doing really well. And then there's a whole ecosystem from there to include the power companies that are supplying power, and they're now able to supply more power during daytime hours. So now utility companies that are based in the regions with the most data centers, which is Portland, Oregon, and Northern Virginia with the Amazon, that's Dominion Power and that's Portland Utilities, they're also doing very well. They're having to expand. because they're having to expand, they have to hire construction companies and engineering companies to work on the power lines. And so you have companies like, I forget the name, but it's PWR is the ticker, that does very well, and others like that. And so it goes on, but like it's a web of economic, reliance, right? And it's hard for people to know that by themselves. So being able to monitor kind of these movements, on top of kind of the knowledge base of, generally, we know that power companies supply power, and generally that, with more power demand, the companies should do well. But what about where?
Mm.
Like having to do that research to know that Portland and basically the DC area are the hubs. So if you don't want to do the digging, you can just kind of see it in the movements, either in price or earnings or events. So that's the part that excites me, because I get kind of a front row seat to the global economy. That's what it looks like to me when I look at it. I'm like, wow, what's going on with like fertilizer? Why are these prices going up? Why is GM stock diving today? Oh yeah, they closed the ports today because of the strike. Why does that affect GM? Oh, they export all their cars through Baltimore to Europe. Got it. And so you sort of put together these things very quickly, much faster than we could ever do. And you don't have to be an expert. You just have to be curious.
Very interesting. To me, it sounds like AI bias might not be too much of an issue here, right? Like this is one of the topics or the trends that has come up on the podcast a lot. We talk a lot about generative AI on the podcast as well, obviously. But to me, it sounds like it's forgive the lack of jargon, but it sounds more like traditional artificial intelligence, which is just crunching data and giving you the information that you're querying, rather than creating or generating actual like new thought or connections. Is that correct?
Yeah, I mean, we're creating the analytics. It's mining the data, automatically, and it's looking and interpreting language to figure out things like directionality or tone, or if one company buys another company, which one is the order, because it kind of depends on how the announcement is written, things like that. But it's not really biased in any way where, if you ask a question, like an ethical question into ChatGPT, you say, well, if I had to discriminate against someone to save someone else's life, should I do it? And you get an answer like, no, I would never discriminate against anybody. Like, oh, okay. This is the iRobot thing. And Will Smith was right. And you look at it and you're like, okay, no, it is sort of using like the analogy that I use for ChatGPT and some of the other generative AI systems is that sort of the mouthpiece. If you think about like a human body as the analogy, that's the mouthpiece. We are kind of feeding the memory storage and serving more as the brain, because we're finding the information, we're processing it, we're giving it form and function, we're creating the analytics. And then if you would enter our data into a ChatGPT, it could summarize it, right? Because we give it nice structured format that it could summarize at that point, the way that it can summarize, New York Times articles or scientific studies. And so I think it's all an integrated part of things, sort of source the new information, get the answer, let the Gen AI, provide a summary of the answer, or, if there's a visual Gen AI system, you can maybe visualize it in a novel way, but you still need that input, right? You still need that data. Someone has to find that answer. And that's kind of where we're focused. It's like, we want to really answer these questions with data, and then we let the ecosystem of products out there, once we plug into it, take that answer and do novel things with it. You can make reports, you can summarize it, you can make graphs, things like that. That's how we kind of see ourselves in this landscape. And I think there's an important role, for that sort of the truth-seeking AI, and we try to eliminate the bias from there. Most of the bias is coming from news providers. So we have, for the most part, cut out the news and get information directly from companies now, as we find it more accurate. Information's not left out. There's less likelihood of manipulation by third parties, which happens with the news. Quite often, you see like when they don't actually attribute the source, but they say things like, this company is selling to another company according to people familiar with the matter. Did I trust that?
Yeah, ridiculous.
Right.
Yeah.
Like, so that way we can get around that kind of stuff.
Yeah. So maybe moving forward, kind of like towards the future, if you will, it really does sound like, well, what some people have been proclaiming, whether there's a source behind them or not, but they're saying that AI is going to make investing significantly easier. Maybe layman, such as myself, I'll put myself in that bucket. Like, it's going to make it. Um, it'll reduce the friction and kind of facilitate the entry into a level of investing that maybe not like the highest, most professional people were able to do several years ago, but you can certainly kind of get bumped up to like a middle level investor that has a sufficient amount of data, of understanding, and a potential, a couple different paths that you can take with the AI just feeding you that information, going on a platform like yours and using, ChatGPT or whatever else to summarize this information. Is that kind of like where you see things are going? Yeah.
I do. It definitely takes down a lot of the barriers. I think the two biggest barriers really are time, right? And the time can be kind of broken out into time to read and analyze and think and monitor. And the other part is like the actual monitoring time and the scale of the monitoring. Like, okay, you might have time to look at 10 companies, but you don't have time to look at 6,000. So that's a huge barrier to entry. And, one of the reasons we named the company LevelFields is like, if you look at your typical, let's say, hedge fund that has 200 or even 2,000 employees, that's 2,000 people pouring through all the documents, all the stocks, all the reports, all the news. And then there's you, an individual investor, trying to do the same. It's impossible. So it is now possible with AI as your, speed reader looking for things. And you could say, I like tech companies that, are in this following scenario. They have this much in revenue. They're doing this type of event. They maybe have the new CEO. Set your AI search, and it goes and finds those companies and brings it back to you. So it saves you a ton of time, and it creates, elimination of that barrier. And then the second one, obviously, is knowledge. Like, okay, what constitutes a good growth rate, for a company? What constitutes a good valuation? Those are not necessarily issues we're tackling immediately, but down the road plan to. But they are already available widely on the internet. If you want to spend the time, you can find 20 articles on the right valuation for a stock in a certain industry, or you type it into, a ChatGPT, and it will summarize the articles that someone else has written for you. They may be right, they may be wrong, you don't really know, but at least it's there, right? So now you've just transformed the whole investing experience that could have taken, 20 years on Wall Street to learn, and, gotten it done in maybe a month or two, with the new tool. So I think it's a game changer for sure. I know from directly talking to a lot of wealth managers, they're terrified of this, because why give your 1% of your money every year to someone to manage it if you can do it yourself? And the small sums of money, it's not that big a deal. But when you start getting into the millions and you're giving away, tens of thousands a year, it adds up over a lifetime significantly. So that industry is going to be disrupted in a major way. They already are in many ways, but still kind of holding on, I think, with probably a generation change. We're like one generation away from, in my view, having that industry being either irrelevant or the fee structure changes. And I think there's a scramble to think about it differently, instead of, being the wealth manager, being paid to manage your money, to moving towards more value add services like planning for your retirement and your, children's college savings and what you need to put aside, and, what kind of decisions in life you need to make, and, legal issues like estate planning. that, are not going to be necessarily replaced. And they're looking to create products to purchase to make it easier. They create an ETF, they can charge a fee on the ETF and charge 0 fees for management. It just obviously sliding it a little bit to a different angle of the fee structure. But that's certainly going on. And the big firms are all looking at, how do we do robo-advisors, because people are not going to pay for advice, but they might pay like a monthly fee for a robo-advisor that they can talk to. So that's the way I see it changing. It's like if you have like a co-pilot robo-advisor that you can speak with that is trained on the things that you're interested in and maybe can, customize its recommendations on the basis of your style, whether you're a conservative investor or, more aggressive style or, types of things that you're interested in purchasing, right? I love boats, for example. So if I'm saving towards a boat, maybe it's trained to know that, hey, prices of boats have dropped substantially because demand has gone away post-COVID, and this is the best time to get in on like boat sales. And the season to buy a boat is October because they're worried they're going to sit, for the next 6 months before the season starts. I would pay for that kind of advice for sure.
Sure.
Someone watching out for my interest that way or something. That's saying, hey, Andy, get on this. Like, there's a place down the street you can put the boat in storage for $100 a month, and you'll get, a $20,000 discount if you purchase the boat now. Math makes a lot of sense. Go do it, and according to your cash balance, you can handle it. Like that, I think, would be like the next gen financial advisor. I would love to see that.
Yeah, it's definitely moving into some sort of Tony Stark, Iron Man, near future where these kinds of whether they're called like AI agents or assistants or helpers or whatever term the industry, the world will eventually settle on. I think it's very exciting, and I'm so happy that I get a lot of guests that come on and kind of reduce the amount of impact that whatever it is that they're working on, right, might have. And I understand why they do it, and I don't begrudge them for it, but I'm happy that you're one of the few that are saying there's going to be substantial impact in this industry, and it's happening very, very soon, for the reasons that you've laid out very clearly. So I'm happy that you're one of the few that is actually, kind of maybe ringing the warning bells a little bit. Because I get the sense that a lot of people are saying, oh, impact is going to happen, disruption is going to happen, but it's going to be a shift in work. And that's, everybody will be able to do that. And like, you just look at, the most, how should I say, tangible or relevant transition in history, which is from the horse and buggy to the automobile, right? It's the most overused analogy there is, but I think it's overused for a reason. You had the entire supply chain of, what is it? Shoes for horses, and you had the wheels, the suppliers that were building the wheels and stuff like that. A lot of them may have shifted over to, now doing tires or metal spokes for tires and stuff like that. But the vast amount of these suppliers just kind of went belly up. And I don't think there's a lot of discussion about how that's going to happen for a lot of industries once like AI tools like yours start to get involved. Businesses that aren't thinking about this, 3, 4, 5 years ahead of time, I think are going to be left in the dust. And so anyways, it's a bit of a pet peeve of mine. So I want to thank you for like really enforcing the idea of disruption here. It's scary, and I think that people should be scared to a certain extent.
And I think to your point that if you're coming from an industry and it's threatening your industry, there's kind of a human natural tendency to downplay it. I'm not from the financial services industry.
Right.
So I'm kind of eyes wide open, like happy to disrupt it. People are not happy with me, and I hear that, fairly often, but that's okay. Like that's what happens with change. And, I know from some of the larger hedge funds that have reached out to us, they're aware, very aware. They're trying to figure out how to adapt. And the big ones they have the money to kind of buy their way to the solutions that they need. Smaller ones will have to rely on other tools. like ours. And then those who are usually the slowest to react, which are the banks and the big asset managers, they'll have the hardest time. But my sense is in every industry this happens, and they buy their way out of it. Just like we saw with Apple buying the way out of not developing its own AI with its relationships with, Google and OpenAI. So, and then that's the job of the startup, right? We kind of we disrupt, build a brand, and then the big company comes and buys that brand and says, yeah, that's ours now. And that's just kind of how it happens. In terms of the workflow, I do think we're at a place now where it's still very much a nail gun versus a hammer. How AI is working. And you think about like the way roofs are replaced, right? There's still 6 people that go up on a roof, but instead of hammer and nails all week, they have a nail gun and they get it done in a day. And then it moves to the next house. It's not firing people, they're just doing more houses. I think that's where we are with AI, just at the beginning of that, where one person can do the job of 3. They're not necessarily going to get fired, but the company's going to make more money off of their productivity increases. Is really down the road where we start thinking about full automation. And that was what the strike was about in the ports. They did not want AI in the ports because they knew they would all be fired. And so the unions got together and they're like, no automation or we walk now and nothing gets done. And so they're, keeping their jobs by preventing robotics and AI in the port system. We might see some of that backlash as well. Probably, I would look to the truckers. Teamsters will come in and say, sorry, Elon, we're not doing AI Tesla transports. There's going to be a driver in there at all times and they're going to get union pay. Otherwise, we're going to walk now and shut down the whole country.
Right.
And then the deal will be struck. So there's going to be blocks that we probably can't get around necessarily. And then we'll have, just like we saw kind of with like HOV lanes, and when the Prius first came out, it's like, oh, only the Prius can ride there. Like there'll be dedicated lanes for AI, self-driving transport systems, but all others will still be driving on the road. So, and I think as you look at different sectors, you can kind of divvy it up that way. But for me, when I look at wealth management, because it's a personal choice of like where to put your money in, and an individual has that choice and will retain it, I do see a lot of disruption there. And law as well.
And laws, yeah, that's a whole other rabbit hole we can go down for sure.
I come from a family of lawyers, so I always.
Hey, okay. I'll have to have you back on to talk about that. There's only a couple more minutes for the time that we have allotted here. Maybe one kind of final question that kind of connects to what you were saying, and I think you've already partially or mostly answered it. But it's this idea of oh, and I've just forgotten the term, ephemeralization, I believe it is, right? So you can do a lot more with less. And, as everything that you've said, kind of taken it to the extreme, there's also this idea of, I think it was Jensen Huang of NVIDIA that was just talking about it a couple days ago. I think it was him, about in the next couple of years, we're going to be seeing, oh, sorry, it was Sam Altman, seeing like billion-dollar companies set up with one individual, right? Like I think one of the earlier examples of that was like Instagram. I think it had 13 people or something like that, and then they sold it to Facebook for about $1 billion. As you're discussing, the disruption, what these AI tools are able to do, specifically within the financial industry, it kind of sounds like you could build your own hedge fund by using some of these tools, be one of the smartest people to use these AI tools, and then sell your services on the backs of, your platform and others, and essentially create $1 billion hedge fund just essentially with yourself. Is that kind of where, now maybe that's a couple of years away, but is that maybe where things are going to be going as well, and we have these huge hedge funds that kind of shrink down as well?
I think so. Yeah. I think they're already looking at it very hard. I mean, we've been going down that road for a long time. And
Yeah.
hedge fund, they've been doing the quant algo driven trading forever. So if you ever watch the show Billions, it's pretty good and accurate at capturing the difference between kind of the old way of doing it, where you have kind of the,
Yeah.
traders on the desk looking at the monitors constantly. And then there's a sort of new kid on the block who's quantitative driven, creates one algorithm, has a hedge fund with just a handful of people, and is able to raise billions of dollars in capital. And that show is like executively produced by one of the hosts for CNBC, who sees this stuff every day. It's very accurate. Um, and I think it's been going that direction. AI is just kind of finalizing it, making it even easier in some ways. I actually think that what doesn't get enough talk is management level AI, right? We always look at like very low paid work and talk about low paid work being replaced by AI. But that's like the easiest thing to replace. If someone's making French fries all day and you get a robot called Flippy that can move the fries back and forth and people don't get burned and there's no lawsuits anymore, that's great. But what about like this massive level of management that we're all required to do? And if you look at like a large corporation, just in the performance review process and how much time goes into goal setting and, tracking your performance and giving feedback, like that part can be applied pretty much anywhere. So there's never going to be a lack of oversight. There's always going to be a need for it. So whether it's a hedge fund or otherwise, you need some level of oversight. You need to deal with compliance and laws and regulations. But it's that like upper middle management. You sort of wonder like that is where most of the staff costs that these large corporations maintain. They're still doing their large R&D. And there's nothing that I've seen really that's chipping away at that yet. If we start to see that, that there's some kind of like AI HR system, then, I think we'll start to run into some real pushback from those who are more likely to accept AI because, hey, it's just going to make my job easier. It's going to save some time, or my staff is more efficient. And all of a sudden, you become the target. You're the one who's gone. So it's a different view from kind of the $1 billion business, which I do think is certainly possible. If I can think of it, I'll run with that myself. Sure. We're a small team and we do a lot, and we do use various AI tools, ours and others, to do stuff. Like it's kind of amazing, from video and content creation and whatnot. But I do think that there's still a lot of room for improvement. And the piece that I'm less, I guess, bullish on would be, where do you draw the line for allowing AI to create AI? I mean, that's like the ethical consideration of, once you have an AI system, developing an AI system, which then develops another better AI system, you have this snowball effect that we lose control over at that point. And then you get into the very kind of scary, okay, what if scenarios that we've seen play out, in Hollywood. And I don't think they're that far off.
Yeah, I think we're getting there faster almost every single day if we're to believe the exponential growth of technological capabilities. It might seem like it's a far away vision, but that's the footsteps are getting larger, right? We're covering more distance every single day towards that far off reality. Yeah, fascinating ideas. I've read before, and I think I talked about it on the podcast way back when I started, this idea of the economy of things, right? So we have the Internet of Things that's been growing over the past several years, but the economy of things would be essentially, and it kind of exists to a certain extent now, but not as widespread as it might, where it's essentially machines and AIs transferring goods, making decisions and purchases, and sending things amongst themselves through themselves, right? So whether it's a I think the best example is like a smart fridge, right? Realize, oh, I'm out of carrots, so I'm just going to order
Right.
carrots from Amazon. But that just scaled up. So kind of like what you were talking about. I think we're definitely going to move down into that direction. Frees up people from shopping and purchasing, and theoretically we're all just supposed to be enjoying ourselves on the beach at some point.
Right. Yeah.
I don't think that's going to happen, but that's the vision, right?
I don't think it's going to happen either. I wish that were going to be true, that maybe the work week goes to 20 hours instead of 70 or 80, depending on how you work.
Yeah.
But I fear it's just going to be more of the same, like a higher expectation of productivity, same amount of hours. You're just doing more things. Maybe they're higher level, but I think it's just going to be, no, I'm just monitoring 7 systems instead of 1.
Yeah.
Where I've got my team, and my team is smaller, but they're magnified by all these integrations that we have, which are prone to break because someone updates their API. And now we have to do, an API upgrade.
Yes.
We do the documentation that's on the website, and, there's just more. There's always more.
Yeah. Well, I don't know whether that's a doomsday vision or a positive vision, but interesting to think about all the things.
Yeah. I mean, I think it's just the same. I think it's the same level of work, but different way to work.
Mm.
And I look at it a little differently. I look at it more like country centric. So I see like the US culture embracing this fast, innovating fast, being kind of a workaholic culture as we are, and then racing ahead, way ahead of all the other countries in our ability to produce things and export things and get cleaner energy faster. And I just think it's going to be, more of the disparity in the world between the US being an ultra rich nation and everyone else just kind of going, can we get some help over here?
Yeah. Whether it's on a micro level or on a macro level, that's certainly one of the main trends that I keep hearing on the podcast. Right? It's one of the quotes that has been said, I don't know, maybe a dozen times, is something like, "You won't be replaced by AI. You'll be replaced by somebody who knows how to use AI." And so, whether that's a micro level as you as an individual worker, or a business, or at a macro level for a company, and a country level, I think that's very true.
Yeah. Yeah. I mean, and at the same time, we can solve better world problems faster, I think, with better logistics capabilities. And so flying drones that can take medicine into the Congo and things like that we can do. So hopefully it's not just going to go to weapon systems, because that seems to be a big driver, unfortunately.
Yeah. Well, fingers crossed.
Yeah. But I think, all in all, it's positive.
Yeah.
A lot of good stuff in healthcare, for sure.
Right. Yeah. The whole personalized healthcare trend that we're going to see, I think is going to be really fascinating.
Well, even just the drug discovery part, right?
Sure.
That it's so expensive. So my wife works for a pharmaceutical company, and I know the internal cost to develop a drug is about $1 billion. Now that doesn't include the failures. So they might spend 8 billion, and 7 billion fails, and 1 is a success. Well, that prevents a lot of new therapies from coming to the market. The speed at which you have to do clinical trials, the speed at which you have to figure out what new compounds to mix together that might have an effect, can all be radically changed with AI. And those efforts are underway, and we're almost out of a lot of different products. Like, businesses don't bother going and creating new antibiotics anymore. There's no therapy for, various types of funguses. And, the global health threat probably of the next century is not going to be a bacteria or a virus. It's probably going to be a fungus. We don't have anything to deal with those, or we'll see some, vulnerabilities or, previous antibiotics. And the only thing that is like really optimistic about it is like AI will allow small company, right, a small biotech, to advance their science as rapidly as a large corporation, thereby hopefully, create a bigger ecosystem of therapies for everybody.
Yeah.
Which is good news.
Yeah. Andrew, I think we could talk about this stuff all day.
For sure.
Let's end things here. I'll have to have you back on once you create your billion-dollar company with just you and maybe one other person.
Happy to.
But this is really interesting. I'm a little bit, as I said, naive when it comes to the investing world. I've been maybe involved in crypto a little bit too much. So it was great to have you on to kind of expand my mind, and I'm sure the audience definitely got some value from the points that you were bringing up. I'll have your LevelFields.ai website up on the show notes, your personal LinkedIn. Do you have any other places where people can follow you, reach out, or are those the two best?
Yeah, you can. We have a free newsletter, so don't have to subscribe for anything. Just check it out. And there's we just launched a YouTube channel, so there's really interesting videos. A lot of them are AI generated, so that's fun. So you can check it out.
Of course.
There's stock tips and interesting news there. So yeah, please do visit.
Perfect. Well, again, thank you very much for your time and your insights. I'm still not sure about the future. I've said this many times. I'm both fascinated and terrified simultaneously, and I think that you've added both of those things for the investment industry. So thanks again.
Yeah, I feel the same. Thanks for having me. Appreciate
Absolutely.
it. It was fun.
A pleasure. Thanks.
Bye.
Well, thanks for listening to this week's Future Tech and Foresight podcast. If you like what you've heard here, there are, of course, a number of ways that you can support the podcast. The best way would be to leave a review on Apple Podcasts or give a rating on Spotify, which you can find a step-by-step explanation for on the futuretechandforesight.com website. Alternatively, feel free to leave a comment either on the episode show notes or the YouTube channel where you can see video recordings of the interviews. And finally, if you are part of an organization that is aware of the disruptive and transformational impact that emerging and future technologies will bring and want to know more, please get in touch to hear about the strategic foresight services that we offer and how we can help future-proof your organization and take advantage of the phenomenal opportunities available to survive and thrive in the future.
A lot of future-shocked people and future-shocked institutions in our society are simply overwhelmed.
Once there is superintelligence, the fate of humanity may depend on what the superintelligence does.
Science fact is catching up to science fiction.
The first truly intelligent machine will be the last invention that humanity needs to make.
The only scarcity that will exist in the future is that which we decide to create ourselves as humans.
Within a 10-year design revolution, we can have all humanity living the highest standard living anybody's ever known.
Progress is accelerating at an exponential pace, and it's going to reach a point where progress is so fast it's going to be a singularity.
We are probably one of the last generations of Homo sapiens.
Every single headline points to the birth pangs of a Type 1 civilization.